Alright, let's cut through the noise here. The S&P 500 just closed at a record high after the worst U.S. jobs report since the Great Depression? That's like seeing a stock market party while the economy's getting its teeth kicked in. What's going on? Personally, I think this tells you everything you need to know about how disconnected Wall Street is from Main Street right now. Let me unpack this because the implications are wild. Okay, the headline. July jobs data showed a loss of 23,000 jobs. That's not just bad, it's the softest number since 1926. But instead of panicking, markets rallied. Why? Because investors are betting the Fed will pause rate hikes. But here's the thing, this isn't just about rates. This jobs number is a lagging indicator. By the time these numbers hit the wire, the damage is already done. What this really reveals is a structural slowdown that's been hiding under the surface for months. The question is, can the Fed fix it with interest rates alone? I doubt it. Now, the S&P 500 surge. Tech stocks led the charge again. Let's get real. This rally is being driven by a handful of AI mega stocks. The equal weight index barely moved. That tells me the market isn't broadening. It's doubling down on the same bets. What many people don't realize is that this kind of narrow leadership is a warning sign. When the Russell 2000, small caps, can't keep up, it means risk appetite is fake. Retail investors are chasing the hype, but institutions are quietly hedging. The VIX at 14.9? That's complacency pricing, not confidence. History says this combo, record highs and low volatility, usually ends in tears. Then, there's Trump dropping a 15% polysilicon tariff and a $3 billion minerals package. On paper, it's about boosting U.S. energy independence. But let's dig deeper. This isn't just about solar panels. It's a geopolitical chess move against China. By targeting polysilicon, he's hitting the backbone of their renewable energy dominance. But here's the catch. Those tariffs will raise costs for American solar projects. Is this a long-term win or just political theater? From my perspective, it's both. It sends a message to Beijing, but risks slowing the U.S. clean energy transition. And the critical minerals push? That's a Hail Mary to outsource less to China. Good luck. Mining infrastructure takes decades to build. Short term, this is just inflationary fuel. Oh, and Berkshire Hathaway turned net buyer of equities after 14 quarters. Let that sink in. The company that's been hoarding cash like Scrooge McDuck is suddenly buying stocks. What's Warren Buffett seeing here? Either he thinks markets are cheap despite record highs, or he's betting on a soft landing. But wait, Berkshire's cash pile dropped to $365 billion. That's still a war chest. Maybe they're just rebalancing. The bigger story? Alphabet, Google, entered their top 5 holdings. That's a massive shift. Buffett's team is betting on AI's staying power now. Does this mean value investors are finally giving up and joining the momentum crowd? That's a scary thought. Let's zoom out. The gold price is up 6.5% in 3 days. Why? Because everyone's hedging against the same risks: geopolitical chaos in the Middle East, Fed policy whiplash, and currency wars. Gold's not rallying because of inflation. It's rallying because trust is evaporating. And Bitcoin? Flatlined. That tells me crypto is still not a safe haven. The real story here is the flight to tangible assets. If the Strait of Hormuz situation blows up, gold could go vertical. But here's the paradox. Markets are pricing peace while buying insurance against war. That's the definition of schizophrenia. So what's my takeaway? The market's betting on a Goldilocks scenario. Soft landing, no inflation, no war. But if you take a step back and think about it, we're staring down a perfect storm. Slowing growth, political instability, and a Fed that's way behind the curve. This isn't a time to chase the S&P 500's highs. This is a time to ask why we're all so desperate to believe in a miracle. What happens when the music stops and the Fed realizes they've been ignoring the real economy? That's the question keeping me up at night.